Welcome to the Collaborative Cinch, where we break down larger topics into easy to understand bites. Hi, I'm Katie Swanson, founder of Change Collaborative. We bring a corporate level business planning and analysis function on a fractional basis to startups, high growth companies, and companies looking to exit in 3 to 5 years with actual or projected annual revenue of 2 to 20 million. These topics and strategies are designed to inform, inspire, and ignite change in your business and life. So here we go. I want to come on and I want to talk about the recent PPP changes for small businesses that are sole proprietors, independent contractors that file a Schedule C with their 1040 personal income tax return. Because these changes, the intent and what is going to happen is it's going to put more money in the hands of these small businesses. And I'm going to show you a case study and how we calculate this and how that's going to work so that you fully understand the impact of this and what it can mean for your small business. So let's get to it. I'm going to share my screen and we're going to go through, I'll summarize real quick kind of what that change is. So what it's done is it has taken the rule for Schedule C filers. Originally, you would calculate your loan amount using line 31 from your Schedule C, which is net profit. Now the rule is you have the option to use gross income line. We'll look at the line here in a minute, but gross income from your Schedule C rather than net profit, which is going to allow more small businesses to get loans, get bigger loans. Let's get into the case. I'm going to share my screen here. All right, so what we have, if you want to get your Schedule C, go find your 1040 personal income tax return and find Schedule C profit and business profit and loss for your business from 2019, or if you have 2020, a draft of it or done, get that out and let's look at that. So this first scenario that we're going to look at does not have payroll. This small business does not have payroll. Let's look at their Schedule C real quick and kind of run down and see what it looks like. They have gross income. So line 7, that's what you kind of want to be focusing on here. Line 7, gross income of $100,000. Then they have some other expenses here that we see to get down to their net profit on line 31 of their Schedule C of $32,000. So this is what we're working from. This is our document. And then we're going to go over here and I've summarized this information. So we've got the $100,000 of gross income from line 7. I'm going to change this, line 7 of your Schedule C. And then we have net profit from line 31 of the Schedule C. The amount that you're going to use in your calculation for a PPP loan, under the original rules, it was line 31 of $32,000. So you have the option. You can use the original rule or the revised rule. So what the revised rule does, though, is allows you to use your gross income from line 7, which is $100,000. See the big difference here for this small business? So then we go down and we calculate the average monthly payroll. So you essentially take the amount that you're using in your loan calculation and divide it by 12 to get your average monthly payroll. And then you're going to multiply that amount by 2.5 times to get your loan amount. So here you can see that the difference is about $14,000 for the PPP loan amount that this small business qualifies for. It's a huge difference from going from using line 31 on your Schedule C, which is net profit, to using line 7 from your Schedule C, which is gross income. This is a big deal, guys. All right, so if you have payroll, let's go down and look at a scenario where you have payroll. Still, you're going to go find the Schedule C from your 1040 personal income tax return that you filed, or you have for 2019, or that you have a draft form of for 2020. Same thing here. They had gross income of $100,000, but this business has payroll. So you can see we have wages here of $15,000. We have some employee benefits of $5,000. So their net profit is $12,000. So we scheduled that information out over here. So we have gross income still of $100,000, but now it's important to know what the payroll items are, which come from lines 14, 19, and 26 on your Schedule C over here. These are the line items here. You want to pull those out, and net profit. So under the original rules, we would have used $12,000 to calculate our loan amount. So you take that divided by 12, that's $1,000 a month of payroll is what they're calling this, times 2.5. This small business's loan amount originally would have been $2,500. Now, the loan amount can be, which I guess I should add to this payroll, because you can apply to get payroll expenses also in addition to your self-employment income. But we're just going to talk self-employment income here so you can see the difference. So their payroll is $20,000. So the amount to use in the calculation is you want to take $100,000. So your gross income from line 7 minus your payroll items. So the amount we're using is $80,000 here. The average monthly payroll then, if you divide the 80,000 by 12, is about $6,600, and 2.5 times that is 16,000. So you can see this, you can also get payroll. So this isn't technically what this loan amount would be, but I want to show you how big of a difference these rules can be for your small business. So if you didn't qualify before, or if you didn't feel like the loan amount was large enough to take the steps to go apply, you might want to now, is kind of the point, is you are eligible to receive more money now than you did before. So thank you for the opportunity of allowing me to give you this case study and show you how the loan amounts can differ under the original rules of using net profit versus using gross income. Thank you for watching the Collaborative Cinch. If you want this content directly to your inbox, please sign up for our newsletter by going to our website, www.changecollaborative.co, and registering. If you need help with this topic or any other topic we have covered, please complete the Contact Us form on our website for a free one-time 15-minute consultation. We look forward to seeing you next time for another Collaborative Cinch.